In this video, I will test the 3 EMA scalping strategies shared by Trader DNA to find out its real win rate so that we know exactly whether we should use it or not. The creator also mentioned that this is one of the best absolute methods for trading, so let's actually see what this is all about. For the backtesting, I will set the initial account size at $1,000 with 1:3 risk-reward ratio. Apparently this strategy works on all markets, so I'm going to be testing it on Ethereum USDT on a 1-hour time frame. Okay, now let's begin to build the setup step by step. First, we need to click on the Indicators tab and search for Exponential Moving Average. And let's add 3 of them. Now let's double click on one of them and change the length from 9 to 13. And let's change its color to green. The next step will be to access the settings on a second EMA and change its length to 8. And let's make the line a bit more thicker. Finally, let's double click on a third EMA and change its length from 9 to 5. Let's also change its color to red. And finally, let's add another indicator to the chart. We're going to be searching for parabolic SAR. Alright, the setup is ready, now let's understand the trading rules. So, a buy signal is confirmed only when the following conditions are met. First, the red EMA crosses above the blue and the green EMAs. Second, the blue EMA crosses above the green EMA. And third, the parabolic SAR is below the price action. A buy position is opened at the close of the trigger candlestick. The stop loss is placed slightly below the recent swing low. And for this strategy, we're going to be targeting 3 times the risk. Here's another example for a long position. We see the moving averages just aligned in a way so that on the top we have the 5 EMA, which is the red line. The blue line, which is the 8 EMA, is in the middle. And on the bottom we have the 13 EMA. And the parabolic SAR also confirms the entry. The rules for entering a sell position are exactly opposite. First, the 5 EMA, which is the red line, has to cross below the 8 and the 13 EMA. Second, the 8 EMA, which is the blue line, has to cross below the 13 EMA. And finally, the parabolic SAR dots must be above the price action. The stop loss will be set slightly above the recent swing high, and the take profit target will stay the same. As we can see, this strategy is very easy. Pretty much anyone who has a basic experience in trading can use it. However, I do believe that sometimes easy isn't always good. If we take a closer look at the strategy, we can see that the parabolic SAR doesn't really do anything to eliminate false signals. Notice when the EMAs gave us a long signal, the parabolic SAR also confirmed it. And if we had entered this trade, it would have turned out to be a loser. If you watched my video on how to combine the indicators in the right way, you already know that you can't combine 2 indicators that do the same thing. And this is really bad because these indicators usually do not cancel each other. Notice the EMAs gave us a signal to go short and the parabolic SAR confirms it. But if we zoom out, we can see that the price action is literally ranging. And normally, a good strategy wouldn't give you a buy nor a sell signal during this time. So in my opinion, this strategy is not complete yet. I will definitely try to improve it in the second part of this video, so stay tuned for that. Okay, now let's start the backtesting to find the real metrics behind this strategy. Alright, so after 100 trades, the results aren't looking that promising. The win rate is only 29%, which is really low, even for such a risk-reward ratio. The account growth is 29.1%, which is pretty much nothing if you're trading on a 1-hour chart. The equity curve is very inconsistent. The maximal drawdown was 16.82%. The profit factor is 1.23, and we had 2 consecutive wins against 9 consecutive losses. This is definitely really bad. I did expect the results to be a bit better. Overall, I give this strategy a score of 4 out of 10. It's quite risky, unreliable, and you will give up on the strategy very soon after experiencing all these losses. So the question is, can we make this strategy better? And the answer is yes, we definitely can. So the first step will be to get rid of this parabolic SAR indicator and add a different confirmation indicator, which is called stochastic RSI. The next step will be to change the length on these moving averages. So first, let's replace the 13 by 100, the 8 by 50, and the 5 by 20. Now we have the setup ready, let's learn the trading rules. This is a very smart entry technique and is for advanced traders only. So for a buy setup, you want to have the following conditions met. First, the moving averages must be aligned in a way so that the first goes 20, then it goes 50, and on the bottom we have the 100. Second, the price action must pull back into the 50 EMA. Before the pullback, it obviously needs to be above the EMAs. Third, a bullish engulfing candlestick must be formed after a bearish candlestick that's touching the 50 EMA. Fourth, the stochastic RSI must get oversold during the pullback. Once we have these conditions met, we're going to enter a long position as soon as the stochastic breaks above the 20 level and the bullish candlestick is formed at the same time. The stop loss will be set at the recent swing low, and this time we're going to be targeting 1.5 times the risk. By the way, if the price action exceeds the 100 EMA, the signal automatically becomes invalid. Let's take a look at one more long example. Here we see the EMAs are positioned in a way so that they indicate an uptrend. The price action pulled back into the 50 EMA. A bullish engulfing candlestick was formed after the most recent bearish candlestick that was touching the 50 EMA. The stochastic also got oversold. And notice, when it got out, the market formed a bullish candlestick. For sell positions, the rules are exactly opposite. First, the EMAs must be aligned in a way so that on the bottom we have the 20, in the middle we have the 50, and on the top we have the 100. If they are positioned this way, the downtrend is officially confirmed. The second condition will be to have the pullback where the price action touches the 50 EMA. The stochastic must also get overbought. An engulfing bearish candlestick must be formed right after the most recent bullish candlestick that's touching the 50 EMA. For the sell entry, we're going to be waiting for the stochastic to break below the 80 level and the market to form the bearish candlestick at the same time. The stop loss will be set at the recent swing high. The take profit target at 1.5 times the risk. The strategy might seem a bit complex, not gonna lie, but once you have mastered it, it's gonna be very easy for you to spot the perfect trade entries. Okay, now let's move on to the backtesting to find the real numbers behind the strategy. So after 100 trades, the results are much better. The win rate has increased to 74% and we gained over 427% of profit on our account. The profit factor is 4.27. We had 14 wins in a row against only 4 losses in a row. The maximal drawdown was only 7.76%, which makes this strategy perfect for scalping. I would highly suggest you to go ahead and backtest it on different markets and different time frames as well. Okay traders, I hope you found this video useful. Make sure you like it if you did. By the way, if you want to see more strategies for crypto, check out this playlist right here.